What's up everybody? Welcome to the Stocks channel. My name is Cory and today we see the stock market pulling back across the board as we go into FOMC meeting tomorrow. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 1.15% and SPY is starting to pull down before completely filling that gap just below 390. And remember, while SPY is below 390, we do want to expect lower prices, which means we could even potentially retest the June lows and fill the gaps to the downside. Now, we do have gaps in both directions, and the reason we favor the downside gaps is because we do have a downtrend of lower highs and lower lows. So the bulls will need to get SPY back over 390, reclaim that level as support, and then try to break the critical resistance trend line right around 403. Remember, this is a trending market and it's currently a downtrend, so do expect lower prices and do expect bears to show up at resistance, with the strongest and most critical level being SPY 390. Below 390, we have critical levels around 385, the gap fill at 378.57, and then below that, we'll be looking for the price target and gap fill around 368 to 369. You need to respect the downtrend until we start breaking resistance, which means we need to get back over 390, and then we'll need to break some of the resistance around 395 and 398. So continue to expect lower highs and lower lows until we break out of this downtrend, and tomorrow could be the catalyst in either direction, whether we go down and fill the gaps or start to bounce to the upside. So know both scenarios, and if you're not sure what to do, you're much better off just waiting in cash until we get more clarity. But for the time being, you should be expecting lower prices, and it's really as simple as whether or not we're above or below SPY 390, because that is the only critical risk level I think you need to be paying attention to. And right now we are below 390, so it's still a risk-off market. On the Nasdaq 100 triple Qs, we were down 0.8% today, and we do have a perfect doji candle going into tomorrow, which is exactly what you would expect, as traders are unsure of whether they want to be short or long, so they're just sitting around doing nothing. The critical risk level on the triple Qs is 293, and we can start to get more bullish above 293, but we'll still have strong resistance around 296, 300, and the resistance trend line right around 302, and it's still possible everything is a lower high before the next lower low while we're below 302. The next lower low price targets are going to be 284, 280, and then 267.5, which is possible to reach that target by the end of the month. So continue to remain risk off while the triple Qs are below 293. On the Dow Jones, we were down 1.01%, and the Dow Jones is still holding this support zone right around 305. But if we do break that level, you want to look for the next leg lower at 298.7 and then 293.5. To the upside, we have resistance right around 310 and the critical risk level at 312. And we'll need to break all the way back above about 319 to 320 before we break the downtrend. And then we can start filling the gap to the upside and testing the 50 daily moving average at 322. As you can tell, all of the indices are currently in downtrends, so do respect that we are currently seeing lower highs and lower lows. On the Russell 2000 IWM ETF, we were down 1.36%, and the small caps continue to look relatively the strongest because they have not yet closed below the support trend line, and we're right at that critical support and risk level at 178. If we lose support at 178, the next leg lower will take us to 174.7, and then if we break below 174, you'll be looking for 168, and then the June low at 163.75. To the upside, we have a gap to fill around 181, and then we have resistance right around 183, 184, and the 50 daily moving average just below 186, and we'll need to break above the resistance trend line to start breaking the downtrend. The ARKK ETF was down 2.47% today, with price action continuing to close below that resistance at 43, and it looks very likely that we're coming down to retest the previous low down here at $40. Below 40, we can retest the lows at 36.5, so keep that in mind. So that is going to be your critical risk level of support right there at $40. Above 43, we have the critical resistance trend line at 44 and the 50 daily moving average at 45.5, and we'll need to break back over all of this resistance to close the gap at 47. On the VIX, we're up 5.44% as the VIX continues to ping pong between about 25 and 28, and we have not yet had a bullish breakout below 24 or the bearish breakout above 28. The VIX is consolidating with a flat top around 27.8 and a rising wedge of higher lows, so do keep in mind we are going to see a breakout in the VIX in the very near future. VIX above 28 is very likely going to take us down into a much more volatile bear market, and VIX below 24 will be a much more bullish market, which means we could break the downtrend. On Bitcoin, we're currently down about 3%, and Bitcoin is back down to this critical support zone right around 19,000, which is the level that Bitcoin continues to bounce from. If we break this support, the next leg lower will be down here at 17,000, and we cannot get bullish until we break the resistance trend line, which is currently at 22,000. So yes, you can be accumulating at these levels, just be prepared to buy at lower prices if we do break down below 19,000. On Amazon stock, we were down 1.98% as Amazon failed to close the gap to the upside just above 125, which is also going to be our critical risk level that we need to break back above to reverse the downtrend. As you can tell, Amazon is losing the support trend line for 3 days in a row, and a lot of the moving averages are starting to get negative slopes and crossing over to make a bear trend. So respect the fact that Amazon is bearish below 126 and it could come down and retest 115. And if we can break back over 126, we still have resistance at 128, 130, and the resistance trend line at 132 to 133. On Microsoft stock, we were down 0.85%, and Microsoft continues to look extremely weak, retesting these June lows. And so far, we have not yet closed below that support zone at 242. On a closing breakdown below 242, we can go for the next leg lower at 231, but this could be a very decent risk reward ratio because you know very quickly if you're wrong if you're taking long trades off this level, and there's a very decent reward to the upside at that resistance at 252. And if we break above 252, the next resistance will be 255. So this could be a great time to take on risk. Just do keep in mind it is risk off on a break below 242. On Nvidia stock, we were down 1.54% as Nvidia continues to get rejected from this resistance right around 135. And if we can break above 135, then we can go close the gap at 142 and test resistance at 145. On a breakdown below support at 129, look for a retest of the low at 126. On Tesla, we were down 0.11% as Tesla tried to break through that resistance at 309 intraday, but as you can tell, there was just way too much selling pressure above resistance, and we did close below 309 yet again. Continuing to get rejected from here is very likely going to lead to more selling, so look for downside support at 304, 296, and the gap fill at 289.5. If we do start to pull back from 309, it is possible this does turn into a daily inverse head and shoulders with the neckline up there at 309. So in the short term, even if we head lower, as long as we can hold above this shoulder support right around 283, it is still possible this is a buy, because if we do get the bull breakout, we could go into the 330s. So manage your risk around resistance at 309 and try not to get too bullish if we see a continuation of the rejection tomorrow. On Apple stock, we were up 1.57% as Apple continues to bounce from that support right around 150, and today we did break over the resistance at 154, and we did find sellers just below the negatively sloping 20 simple moving average at 158. The bull breakout at this point is going to require a break above 159 to about 160, and then we could go back up there to retest that resistance around 163.5. Downside support will be 154 and then 151, and the previous low at 150. The financials were down 1.47% today, losing the support trend line and closing below 33. So it does look like we could be heading lower if we don't start to get back over the 50 daily moving average in the very near future. The industrials were down 1.24%, breaking down below $90 and very likely coming down to retest support around 85 unless we can get a bounce to close the gap to the upside. The healthcare sector was down 1.17%, coming back down to the support just below 125, and if this level does break down, it could be possible coming all the way back down to 120. The energy sector was down 0.7% with the second day in a row closing back over the 50 daily moving average and bouncing off this support at 76. On a breakdown below 76, that is going to be bearish for a retest of the support at 70 and the gap fill at 69. So jumping back over to the S&P 500, tomorrow is going to be a very important day because it'll likely tell us the direction that we're going from here. And it does currently favor the bears because we do have the downtrend. So continue to respect resistance and expect lower highs and lower lows until we break out of the downtrend. We have lots of gaps to fill to the upside and the downside, so it could remain a very volatile market, and the month of September is typically very volatile, so do keep that in mind. Also, don't forget I still have my 50% off promotion code for 50% off your first month of bank trade alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, at checkout to claim your 50% off discount for your first month. Bank only trades the ETFs TQQQ and SQQQ. and it sends you all of your buy and sell alerts directly via email and text message. I think now is the best time to try Bank, so if you want to find out more information or learn how to subscribe, you can click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.